We're now going to do our combined cash budget. The beginning cash balance is found on the current assets, cash 4,600. So we'll go ahead and enter that. That's one number that we're not going to have a formula for. Add the cash collections. All right, so it's going to equal the cash collections that we calculated right here. And we can copy that across all the way. Then the total cash available is the sum of those two. And while we're at it, we'll copy the formula all the way across. Now, notice I didn't copy the cash balance all the way across because it's going to be changing. So some of these lines you can copy across, and others you have to wait, and we'll do a month at a time. Okay, cash disbursements. That equals, this is cash disbursements for materials. So let's go up to our materials disbursements. It equals C77. We'll copy that across. For conversion costs, that equals what we calculated in our conversion cost budget. And the fun thing about the cash budget is you've basically done all the work. Now you just get to cut and paste. Well, not cut, just copy and paste. Operating expenses. That's going to equal the cash disbursements there, and we'll copy those across. Now, equipment. Let's read what it tells us about the equipment purchases. It says here in the letter F, computer equipment for the administrative offices will be purchased in the upcoming quarter. In January, Oneness Movement will purchase equipment for $5,000 cash. February's cash expenditure is $12,200, and March's cash expenditure is $16,600. They're emphasizing cash because this is a cash budget. And so if we're going to be buying anything on with a note payable, that would not go on the cash budget. And we can sum these across, equals sum of this through this cell. Okay. The reason I put the formula in there rather than using the auto sum is the auto sum automatically adds what's above if there's something there, and so it makes it easier to just let it know by putting the formula in that I want to add across. Okay, taxes. Talks about our tax expense in the letter J. Company's income tax rate is projected to be 30% of operating income less interest expense. The company pays $10,000 cash at the end of February in estimated taxes. We're doing the cash budget, so that's the number we're interested in, is the $10,000 payment. We'll come back and use that 30% when we do our income statement. So they're going to be paying $10,000 in February. Okay? And we'll sum that across. Now, total disbursements, we're going to sum those, and that grabs them all there in that formula. And this is a formula that we can copy across as well. Now, the Oneness Movement, I'm in the letter I. Oneness Movement has a policy that the ending cash balance in each month must be at least $4,000. It has a line of credit with a local bank. The company can borrow in increments of $1,000 at the beginning of each month, up to a total outstanding loan balance of $100,000. The interest rate on these loans is 1% per month, simple interest, not compounded. Oneness Movement would pay down on the line of credit balance if it has excess funds at the end of the quarter. The company would also pay the accumulated interest at the end of the quarter on funds borrowed during the quarter. So they've got cash of $85,610 minus the disbursements. Let's put that in here. This equals cash minus the disbursements. All right, so they've got a negative position, and they have to end up with $4,000. So you might think they have to borrow $6,761, but remember, we have to borrow in increments of 1,000. So we're going to have to bump that up to 7,000. And when we borrow 7,000, that is going to give us, I'm going to total the financing section here, just so we've got it. And I'll copy this across. Okay, so what will our ending cash balance be? Well, it's going to be the excess or deficiency plus what I have financed. Okay, so we've got $42.39, and I have to have a balance of at least $4,000, so we're good. All right, now February's beginning balance equals the ending balance for January. So put a little formula in there. Total cash available is $110,559. Total disbursements $109. Let's copy this formula across here and see how we're doing. All right, we've got $1,200, but we need to have $4,000. But we can't just borrow $2,800. We're going to have to borrow $3,000. So that we end up with the $4,000 that we need at the end. And let's copy this one all the way across. So we've got $4,200 at the end. Perfect. So March's balance, beginning balance, equals the ending balance of February. Cash available, $121,740, minus our disbursements of $107, leaves us $14,078. Well, that's great. We can pay back some of these loans. But notice, we've got to end up with $4,000 at the end. So even though we owe $10,000, that's only going to leave us $78,000 or $78 for interest. Let's see if that's going to be enough to cover the interest. To calculate the interest, we assume that we borrowed it at the beginning of the quarter and we're paying it back at the end. So we borrowed it at the beginning of January and we're paying it back at the end of March. So 7,000 times 1% times 3 months is 210. Okay, right there, that lets you know we're not going to be able to pay back all 10,000. We're only going to be able to pay back 9,000. So let's recalculate this. I had put a calculation in for what would it be if we paid back all 3 months, all 10,000, and the interest on the 3,000 for 2 months is $60. So we're not going to be able to pay back all 10,000, but we're going to have to pay the interest on the whole 10,000. So our repayment is going to be 9,000, and our interest is going to be minus 270. So again, just to reiterate, what it says in the instructions is it says the company would also pay the accumulated interest at the end of the quarter on funds borrowed during the quarter. So you figure the interest and then see how much of the principal you can pay back, which in this case is 9,000, because that will leave us with 4,808. And that's why we can't pay that extra 1,000 back. Okay, now, looking at the quarter column, you want to be able to have it make sense as it stands alone. So the balance at the beginning of the quarter is not the sum of these three, but it is the $4,600, because the beginning of the quarter is January 1, and that was our cash balance on January 1. Then we've got total cash available in the quarter of $309,470, and total disbursements of $305. So that leaves us, if you take the cash available minus the disbursements, overall we end up with $4,078. Now let's sum our borrowings across just for formatting purposes. So this equals the sum of this cell, colon, and that last cell, parentheses. And then we can copy that formula down. Okay. So the ending cash balance at the end of the quarter, which is March 31st, ends up being the same as the March 31st balance in the March column, which it needs to be, or else it's wrong. Now, if you try to just add everything all the way across, it will end up balancing, but your numbers on the quarter column will be off. So if you add all your beginning balances and all your ending balances, it will end up cross-footing, which is adding across and down, but it won't make sense. So just be aware that the quarter column has to make sense as if you were doing it by itself. Because sometimes when companies do budgets, they're going to prepare them with all 3 months, but they may just focus on a quarter at a time. So that has to make sense by itself. All right, the next budget that we'll do is the manufacturing cost per unit.